Hope everybody's well. Can you hear me? See my charts? Okay, let's kick off the session, and we're drawing ever closer to that major event at the end of the week, the non-farm payrolls, and the closer we get to it, the more good information we receive. So yesterday's session, although not particularly spectacular on the upside in the end, due to reasons that I'm going to talk about in a minute, it was another day of really good information, really good economic data, and we've gone on to make new highs, so new 10-week highs. If I just increase the size of my S&P chart here, where I'm looking at the last couple of weeks, you can see the steep climb we've had since that low on the 30th of July. And we've seen a turnaround in the US economic data, and that turnaround seems to be continuing. I know we've had 3 sessions this week, and 2 of them we've had really good economic data. 1 of them we had bad. Okay, so Monday's session was great, really good ISM manufacturing. Tuesday not so good. We had bad pending home sales. We had bad personal income and personal spending. But yesterday was back on track, back on the front foot, and we had the ISM non-manufacturing data to go along with the manufacturing data we got on Monday, and it was very good news, better than expected. Quite a lot better than expected, not far off the highs of the recession, and significantly, you've got to look at the components of these indexes, and the employment component for the ISM non-manufacturing not only was better than last month, but significantly it moved above 50. Okay, that's the key level. That's where employment moves from contraction into expansion. Okay. Also, to go along with that good news from the ISM non-manufacturing, we had the ADP employment report, and that too also showed quite a bit more health in the employment market. So, having had a couple of months where the US economy has really been stumbling and the recovery has definitely been reducing in pace, we've suddenly hit a floor, I think, and we've bounced off that, and we're starting to get some pretty healthy signs again. Chicago PMI really kicked that off in style last Friday, and since then we've had some further good news from manufacturing and non-manufacturing sectors. Good news on the employment front. This is all gearing up for Friday's main event, and the expectation levels have definitely risen, and that's why the markets have risen, and we've been edging higher again. This morning we've made a new 10-week high. Today's high 1127.75. We are now in touching distance of that key level. The key level's at 1129.50 for the E-mini S&P. That's the 2.5 month high. That's the high we set in mid-June, and that's the major target we've had in our sights for the last couple of weeks, and we're so close, it's almost certain we're going to test it during the session today. So, these markets are on the front foot. Sentiment's good, with good Asian session overnight, good numbers out of Toyota. And this morning we've had some good news as well. Barclays announcing better than expected profits, £3.95 billion. We'd been expecting 3.4. That's for the first half of this year. Bad debts fell. This good news offset what was a pretty lackluster investment banking performance where they made some losses. But Barclays profits definitely good. That has really ended a fantastic week for UK financials across the board. Outperformance much better than the market had expected, so really boosting that financial sector. Also this morning we've had another Spanish bond auction. They auctioned off €3.5 billion of October 2013 bonds. What was so good about this wasn't necessarily the bid to cover, which was good. It was 1.9. The bid to cover previously was 2.1. So the bid to cover's fine. What was the key here was the yield was a lot lower than previously. The yield coming in at 2.276. The previous one was above 3.3. So it's the yield on this that has really added a positive spin. The Spanish bond auctions recently have been very healthy indeed, and this is just continuing the calming of the fears surrounding the European debt crisis. Other good news this morning, German factory orders much better than expected, plus 3.2%. We'd been expecting plus 1.4. They also improved the previous months as well. this isn't a surprise. Germany, their export-driven industry, really benefiting from what has been a very weak euro. It'll be interesting to see data in the coming months. So data for July and for August, actually, as the euro has bounced in the last few weeks, as we know, but it's still, you know, at massively reduced levels than it was this time 12 months ago. So good news out of Germany. Also of interest, we've had news from the ECB. So I'm just hearing some of you can't hear me. Can you just test if you can hear me? Okay, thanks. So news from the ECB and the IMF. Let me just get the actual quote. Just give me 1 second here. I can't find the quote. Anyway, it doesn't matter. Essentially what they've said is that Greece are on track. They've handed out Greece's second tranche of their rescue package, and they've basically been saying that Greece are ahead of schedule. They're doing very well in terms of the targets they were given, in terms of reducing their deficit. Remember, the target is to reduce it down to, I think it's 8.7% by the end of this year. Okay, so their second tranche has been delivered from that aid package, and the news so far is apparently good. Apparently they're on track to achieve those targets. Okay, so that's further good news surrounding the kind of European debt crisis situation this morning. So, you know, things are good. We've made a new 10-week high again, and we're just underneath that key level. What's going to happen? Actually, I just want to talk about yesterday, and I want to show you the euro dollar, because it was a very interesting reaction yesterday to the economic data that we got at 3 o'clock when we got the ISM non-manufacturing data. What we saw was, and it's right here on my chart, a big red candle. This is a big kind of strengthening move in the dollar. This is a very interesting reaction. Up until now, up until yesterday, what we'd seen on, you know, surprisingly good US economic data, we'd seen actually the risk appetite trade, or the reverse flight to quality trade, which actually means a weakening dollar. Okay, so we've seen the euro dollar move higher off good US economic data up until yesterday. Yesterday was the first time we've seen quite an aggressive strengthening dollar move off good US economic data. So this, we think, and we've just hit our entry point actually as I speak. So R1 is our entry point short for today on the euro. We're now short, having been long for the last few sessions. We're short because of yesterday's reaction to the data. So we've just come off R1 nicely. That seems to be a good entry point at the moment. What we think here is this might be the turning point. This might be the beginning. I'm being cautious here, but this might be the beginning of a bull trend for the dollar. Of course, we need to wait for tomorrow's key data to really confirm that, and we need to see the reaction to the dollar tomorrow if it is good news. But we think, and we had a similar situation on December the 4th last year when we had the major turn in the euro dollar market. The euro dollar had been rallying for most of 2009 until December the 4th, when we got very good US economic data, which essentially changed the market opinion from one of, you know, global recovery, so risk appetite and reverse flight to quality, and the change of opinion was to one of US economic outperformance. Okay, US recovery outpacing others, therefore dollar strength rather than the risk appetite dollar weakness. Okay, we think yesterday's reaction, we need confirmation yet, but we think it might be a similar scenario here. It was very interesting to see. We need to monitor this today when we get the jobless claims number, and more importantly, we need to monitor the dollar reaction tomorrow if we get good non-farm payrolls numbers. And if the dollar strengthens aggressively off that, that could well confirm the turning point, and we may well return to a dollar strengthening trend that we had for the first half of this year. Okay, so really interesting reaction yesterday in the dollar, and that's something you've got to keep your eye on. And what did that do to equities? Let's just go back to the S&P, and I want to zoom in a little bit on yesterday's data release, because this is very important. I'm going to zoom into a 5-minute chart here because I really want to show you the specific reaction. Okay, here's yesterday's session, 5-minute chart for the S&P. First of all, really good ADP numbers at 115, pretty big spike higher. Okay, then we consolidated that. But then at 3 o'clock we got the ISM non-manufacturing data, really good news, spike higher, new 10-week highs in fact. Then what happened was a complete reversal. Okay, and we actually went on to trade back to the levels we were trading even before the ADP news. Why is that? And the reason is, first of all, equities rallied, as you'd expect, good economic data, risk appetite. Then we saw the dollar aggressively strengthen, and because of the correlations that are at play in these markets, the strengthening dollar dragged